Why is China quietly becoming the world's biggest buyer of gold? For over a year, the People's Bank of China has been on a historic gold buying spree, adding hundreds of tons to its reserves. This isn't random, it's a calculated move as tensions with the US escalate. China's gold accumulation signals a push to reduce its reliance on the US dollar and assert financial independence. Every ounce of gold in Beijing's vaults is a step away from the dollar-dominated world order. Gold is more than a commodity for China. It's insurance against sanctions, currency devaluation, and foreign control. The scale of these purchases points to a long-term vision reshaping global power. Official reports show China as the world's top gold buyer, but many believe its true holdings are much larger, hidden across state entities. This secrecy keeps rivals guessing and adds strategic ambiguity. By converting US dollar reserves into gold, China is hedging against its main economic competitor. This isn't just economics, it's a bold geopolitical statement about trust, power, and the future of money. China's gold rush is a clear sign. It's preparing for a world where the old financial rules no longer apply. To understand China's strategy, we need to look at the system it's challenging. The US dollar became the world's anchor currency at Bretton Woods in 1944, backed by America's gold reserves and economic might. Other currencies were pegged to the dollar, and the dollar was pegged to gold, giving it unmatched legitimacy. This arrangement let the US print money to pay debts, creating constant global demand for dollars. The system fueled decades of prosperity, but collapsed in 1971 when Nixon severed the dollar's link to gold. Even after the gold standard ended, the dollar's dominance persisted, cemented by the petrodollar system. Today, the dollar still reigns, but its power is increasingly used as a tool of foreign policy, imposing sanctions and freezing assets. This weaponization has made countries like China and Russia wary, seeing dollar dependence as a strategic risk. Now, they're seeking alternatives, and gold, with its ancient credibility, is the most trusted option. The world's financial infrastructure is built around the dollar, but cracks are showing. China's gold buying is a direct challenge to this system. The question is, can gold really rival the dollar's global grip? For China, it's a risk worth taking. What makes gold so powerful? Unlike paper money, gold's value doesn't depend on governments or politics. For 5,000 years, it's been the ultimate store of wealth, rare, durable, and impossible to print. Central banks hold gold as their highest quality reserve, a backstop when all else fails. In crisis, war, collapse, hyperinflation, gold is the asset of last resort. It's universally accepted, holding value when currencies crumble. Gold reserves symbolize national strength and inspire confidence, especially when trust in governments wavers. Its value is also psychological, deeply rooted as a symbol of security. When faith in banks or currencies falters, people instinctively turn to gold. For China, gold is a hedge against the unknown, a way to anchor national wealth in something timeless. The US dollar is backed only by trust and a mountain of debt. By swapping some US treasuries for gold, China is trading promises for tangible assets. It's a move to reduce exposure to fiat risk and secure a foundation of real value. In a world of uncertainty, gold is China's ultimate insurance policy. China's gold strategy is deliberate and multi-layered. The People's Bank of China reports steady gold purchases, signaling commitment and influencing global prices. China encourages its citizens to buy gold, creating a distributed national reserve. As the world's top gold producer, China keeps much of its output at home, building hidden reserves beyond official numbers. China's Shanghai Gold Exchange lets gold trade in yuan, challenging the dollar's monopoly on commodity pricing. This infrastructure allows countries to trade with China using gold and yuan, bypassing the US financial system. China is also developing a digital yuan, with speculation it could be backed by gold or commodities. A gold-backed digital currency would be a powerful alternative for global trade, especially in emerging markets. China isn't just hoarding gold, it's building the foundation for a new financial order. The US dollar and gold represent two very different kinds of power. The dollar's value is built on trust in the US government and its global network, liquid, convenient, and deeply embedded in world trade. But it's a fiat currency. Its value can be diluted by printing more, and it can be weaponized through sanctions. Gold, in contrast, is tangible and finite. No one can print more or freeze your gold. It's cumbersome for daily use, but it's immune to political risk and inflation. For decades, the dollar's convenience outweighed gold's security. Now, as US debt soars and geopolitical tensions rise, the risks of holding dollars are growing. China is betting that more countries will choose the stability of gold over the convenience of the dollar. It's not about replacing the dollar overnight, but building an alternative system for those seeking safety. The world faces a choice: stick with the dollar's promise, or return to gold's certainty. China is preparing a lifeboat for those ready to jump ship. The global financial order is at a crossroads. Which side will history favor? China's gold rush is about de-dollarization, reducing its vulnerability to US financial power. The US has used the dollar and SWIFT system to freeze rivals' assets, making China's dollar reserves a potential target. Gold, stored at home, can't be seized or sanctioned. It's the ultimate shield in a world of financial warfare. China also wants to boost the yuan's credibility as a global reserve currency. Massive gold reserves signal strength and stability, making the yuan more attractive for international trade. Gold is key to China's Belt and Road Initiative, enabling trade with countries that lack stable currencies or dollar access. By settling deals in gold or gold-linked yuan, China can build economic alliances outside US control. This is a play for global influence, a move to weaken America's financial leverage. China's gold game is slow and patient, but it's reshaping the rules of global finance. The world is watching, and some are already following. The stakes are enormous. If the dollar loses its reserve status, the US faces higher borrowing costs and painful economic adjustments. For the world, a shift away from dollar dominance could mean chaos, or a more balanced system. A multipolar world would reduce US power to impose sanctions and give countries more freedom to trade in their own currencies or gold. Regional currency blocks could emerge, with the yuan, euro, and dollar each leading their own spheres. This isn't just theory. Russia and China are already trading in their own currencies, and Saudi Arabia is considering accepting yuan for oil. Central banks worldwide are buying gold, diversifying away from the dollar. The move away from the dollar is real and accelerating. China's gold strategy is about more than economics. It's a geopolitical power play. By building gold reserves and alternative systems, Beijing is creating an escape hatch from US dominance. For ordinary people, this means more uncertainty, but also the possibility of a fairer, more stable world order. The transition will be volatile, but the era of a single currency king may be ending. China's gold rush is a sign of a new financial dawn, or the start of a long, unpredictable journey. The world is watching, and the next chapter is being written now.